We got some huge news late on Thursday about ChargePoint Holdings. The company announced that its CEO is leaving, its CFO is leaving, and the company is going to have really terrible results from the third quarter of 2023. I'm going to get into all those details, but before we do, I just want to highlight exactly what's going on. I'm recording this pre-market on Friday. The stock is down 75% over the past year before trading started on Friday. As I'm recording, shares are down 31% pre-market, so the market is not reacting to this kindly. It's likely that the company's market cap is going to drop below $1 billion, and it's hard to see a positive future for ChargePoint. But I'm going to get into all those details and why investors should be concerned in this video. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I'm going to get right into it by showing you the two releases that came out yesterday and then a related release that came out last month. This is a press release from Thursday, November 16th, came out after the market closed. And you can see here, they always call these very innocuous things like ChargePoint announces executive leadership changes. Well, it's not just executive leadership changes. The CEO, who's been CEO since 2011, is stepping down effective immediately. They're going to be involved in the transition to the new CEO, which is the former COO. And at the same time, Chief Financial Officer Rex Jackson is also leaving the company effective immediately. It is extremely surprising when a CEO and a CFO leave a company effective immediately, and just tells you that something absolutely terrible is going wrong at the business. That's why the market is reacting so dramatically in early trading, especially a CEO who's been there for 12 years. I mean, this is a very long time to be with a company, and being replaced by somebody who joined the company in July 2022 and is responsible for product management, development, engineering, manufacturing, and supply chain. This is at a time when the company is losing a lot of money. So the chief operating officer of the company that's losing money is now becoming the chief executive officer. I have to question some of the decisions there. But let's get to exactly those financial results, because that was also announced yesterday. Before we get there, I want to show you this from this video's sponsor. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is preliminary third quarter results, and there will be a full earnings report and conference call on December 6th. But these are initial results for the quarter. Revenue is now expected to be $108 to $113 million compared to previous guidance of $150 to $165 million. So that is a huge drop in expected guidance in just 3 months. That tells you that demand just fell through the floor for ChargePoint's products, specifically its chargers. There's going to be a non-cash impairment charge of $42 million, resulting in a GAAP gross margin of a -23% to -21%. On a non-GAAP basis, we're still going to be negative with margins at -17% to 19%. Even before that impairment, you can see that gross margins are also expected to be lower than they previously were. Previous expectations were 22% to 25% in gross margins, now expecting 19% to 21%. So it's pretty easy to see that the company's net loss is going to be very big for the quarter because gross margins are going to be negative, even on a non-GAAP basis. So this is really a warning sign for how bad the conditions have gotten at ChargePoint. One of the lines that stuck out to me is, our first steps are to take an additional non-cash inventory impairment charge related to the product transition and to better align inventory with current demand. I have to wonder if this is related to ChargePoint and all kinds of other automakers moving to Tesla's North American charging standard. So in North America, most companies are moving towards that single standard. ChargePoint was actually building chargers for a different standard. So I wonder if they're going to basically have to scrap a lot of those chargers and now transition their business to this new standardized charger. I'm going to get to some of the challenges there in just a second, but before we do, I want to highlight the cash situation. Management said that there is approximately $397 million in cash as of October 31st, but that includes $232 million that was raised on October 11th. So what was that raise? Let's go to the SEC filing, and there was a number of pieces of this. Institutional investors who had convertible notes basically agreed to some addendums to their notes in return for investing in an at-the-market sale of company stock. 41.4 million shares were sold at a price of $4.23. You saw earlier that the stock price is far lower than that today. And this is curious to me because the third quarter was over on October 31st. So management knew that results were going to be really terrible, knew that they effectively needed to raise cash immediately before investors found out that results were this bad. They also, on that same day, the press release related to this was ChargePoint raises $232 million to support the path to profitability in 2024. So the quarter was over. They knew that revenue was going to be far lower than expected. They knew where they were going to likely have to write down inventory. They knew that there was this huge product transition. And yet they told investors there was a path to profitability in 2024. So all of this added together just leaves a bad taste in my mouth. I've not liked ChargePoint as a stock because of the way that it loses money. I don't think there's a lot of differentiation there, but this does not bode well for the way that management has been talking to investors. I think what we're ultimately seeing is the fundamental weakness in ChargePoint Energy's business. The company is making a commodity, a charging plug that is a commodity design, now the North American charging standard, and they're going to have electricity, which is a commodity running through it. So there's really no differentiation between their plug and any other's plug. That was really reinforced this quarter when they said that they were going to have to write down inventory as likely part of this transition to the North American charging standard. If you're now having to write down your old inventory to make a new standardized plug, how in the world are you going to make money? How are you going to be able to pay back this debt? How are you going to generate high margins? I just don't see a path forward for them. And this has exactly been my criticism of ChargePoint Energy over the years, is that not only was it a very high valued stock, but it was a company that fundamentally didn't have a way to generate returns on what it was investing. They kept spending more and more money on operations. They're currently spending more on operations than they're generating in revenue. And I don't see any path to that changing in the future. I don't see a path to profitability in 2024. We will see what management says on December 6th, but given the drop in the stock, about 30% this morning, if that continues, the window of opportunity effectively starts to close for ChargePoint Energy. It starts to get harder to raise money through equity. As your stock drops, it gets harder to raise money for debt. And unless they can fundamentally get to profitability as a company and find a path to repay their debt, this is not a company that's going to survive all that long. That's just the reality of ChargePoint's situation. Their finances are so bad. You can see in this chart that the company burned through $344 million of free cash flow over the past year. That means that the current cash, even after the October raise, is only going to last the company a little over a year. So I just don't like the situation that ChargePoint is in. I don't see any reason to buy the stock. I don't know why anybody would acquire this company. This has been coming for quite a while. The seeds have been sown for a very long time. Charging is fundamentally not going to be a very profitable business, and that's why I have avoided this stock. I will continue to avoid this stock, and I think investors should be very wary of buying in now. But that's the latest on ChargePoint Energy. Leave your thoughts in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.